back. At a time where there's so much uncertainty in the world, the safe haven or safe asset of choice is invariably gold. But the key question is, will the gold rally outlast stocks, and is gold still the precious metal of choice? Let's get perspective in. Rohit Sawant is Senior Commodity Analyst at CPM Group. Great to have you on the show, Rohit.
Thank you for having me.
Rohit, let's begin with that key question. Will the gold rally last? It's up 13% this year. Do you see that running on?
We really don't see gold prices moving up or down sharply. We think gold prices would range between about 1700 and 1820 over the remainder of this year. On the downside, we essentially see support because there is market interest in gold, and so you would see some bargain buying every time prices go down. But on the upside, we see limited upside, largely because a lot of the factors that have been cited as reasons for gold prices to shoot up, we believe are already factored into the price of gold. So we don't see a substantial run-up from where we are right now.
So a range from 1700 to about 1850.
1820.
1820 is where you witness it. But if you have to, talk about your strategy going into this range, are you looking at gold as a safe haven of choice, which is great given the uncertainty in the world, or are you looking at the currency play and what happens to a dollar from here on versus the euro?
I think both things are important. It is a safe haven. Gold is a safe haven. We believe that it's a good asset to have in your portfolio. That said, today is a good example of every time things tend to go bad, the first thing investors do is buy or get into the dollar. So you're seeing this rise in the dollar, you're seeing gold prices off. You would assume that when the IMF says that economic growth for the world is going to go down, people would buy the safe haven, which would be gold, but they're not doing that. So the reality is, as much as people criticize the US dollar, that's the first asset they run to every time things go bad. And we've seen this happen repeatedly over the past several years. So yes, gold is an important asset to have in your portfolio. We believe that probably about 3 to 5% of your portfolio should be in gold, but we don't believe that that is a guaranteed safe haven to all the problems.
But it's interesting, Rohit, when you talk about IMF cutting global growth forecast, and particularly countries like India, which are largest buyers of gold in the world, to 4.9%, the lowest in a decade for India. Does that say that the market somewhere believes that this is already built into the prices? So it was no big surprise, these cuts in global growth forecast, right, even these recession fears in some cases.
Right. Honestly, all of these factors, if you talk about Europe, if you talk about quantitative easing, all of these things have been discussed extensively over the past several months. Maybe in some cases even for the past 4 or 5 years now, people have been talking about issues with Europe, issues with the US, and these problems are not new. So that's going back to the point I made initially, which is all of these things are already factored in there. All of this is already into the price of gold. Don't expect that sharp move.
So you're making an interesting point also for the rest of the market, all asset classes, that the market doesn't expect a big scare till the end of the year. Nothing is going to scare these markets from here on.
I don't think anything catastrophic is going to happen. I think, people aren't like paranoid about things the way they were, a couple of years back, which is when they were chasing the price of gold up. It has been going up, and investors were buying it even as it was going up. Now what we believe is that they would sort of hold off on making purchases and chasing prices up. Instead, would wait for them to sort of come down a little bit and then get it, which is why we don't think there's going to be like a collapse in gold prices. We don't think that gold prices, this is the end for it. We don't believe that. We do think that when gold prices come off, investors are going to get in there, want to hold some of it, but they're not going to be chasing it up the way they did over the past few years.
What about buying activity from India and China? Because both of them are the top buyers of gold, and now they're going into holiday season, Diwali, etc.,
right,
festive season for India,
right,
and for China as well.
Right.
Do you feel that typically volumes pick up, prices react, or that doesn't really take place?
It's seasonally a strong period for gold demand from both these countries, and it coincides because it comes in around this time of the year. So yeah, it does have an impact on prices, but what you're seeing at these levels is really that buyers they'll continue buying gold. Indians are going to buy gold, but they may not buy that quantity. They might buy a smaller quantity of gold. We need to give a gift to someone, it's not going to be like, it's probably going to be a smaller gift, of gold. So the buying of gold would continue. I just think that on a per person basis, it's probably going to be a lot less. So the volume of buying would be down. So again, something that would kind of play a cap on prices.
Okay, coming to this election season in the US, do you believe that the US macro data is also supporting the fact that the gold range is staying where it is? We've seen better than expected data coming in from US, and pretty much everyone was caught a bit of a surprise on the jobs figure particularly.
Right.
Elections?
I mean, I guess the US is, all said and done, one of the most important economies because it accounts for about 25% of global GDP. So what happens here does affect pretty much everything. In terms of the good data, yes, there have been spots of good data. Things are showing signs of improvement in the case of the labor report. Definitely a positive. Still not something to rejoice. So again, you didn't see prices come off as sharply. I mean, you would think when it goes from 8.1 to 7.8% unemployment, that's a pretty big jump in one go. So you would think that the prices would respond more sharply. They didn't, largely because there are issues, but they aren't as. I mean, these things are basically a problem, and investors are aware of the fact that I mean, if unemployment starts coming down, that's a good thing. Less chances of more monetary easing, which is the reason why you saw gold prices come off a little bit.
Right.
As far as the elections are concerned, definitely the fiscal cliff is a big issue. You are going to see a large amount of volatility in gold prices with, as we come closer to the election, post-election, how they're going to deal with it. We personally believe that in the case of the fiscal cliff, they probably patch together some sort of a solution and basically kick the can forward, and try and solve this problem like in a later date. That's typically how it's dealt with. It's a difficult situation. That's the reality. It's a difficult situation, and it's a sensitive issue, so it's not going to be that easy to.
Right, both sides can't find an immediate cure for that anytime soon, but
Right.
It'll be interesting to see how they tackle it with their respective approaches. Rohit, great having you on the show with us. Thanks very much for making the time.
Thank you.
So Rohit, of the opinion that gold stays in a range, but yet a significant amount of your portfolio should have that as a safe haven component going into the end of the year. Thanks as always for watching. See you back tomorrow.